This is an ETF GLD that tracks gold. You can see on a daily basis it's been compressing here, in my view, and has broken out a really solid move today, up almost 2%. On a weekly chart, it's a little bit clearer. We've had this triangle formation. We've had this big base back the last couple of years. We broke out to the upside, roughly in the 23 to 2400 range in gold. And the last week or so, we have broken out to the upside of this compression triangle. Hopefully this leads to a new high in prices. Our short-term target would be around. Hello, everybody. It's Mike Preston at New Harbor Financial Group. It's Thursday, July 11th, 2024. Here with a timely take. Hopefully we can give you some data and insight and purpose on what you're doing in your investment life. Please think about subscribing to the channel. Reach out to us, share your comments. We'll share ours back. Today, I want to talk a little bit about today's CPI, Consumer Price Index release. This morning, the CPI came in, the periodic CPI release came in at minus 0.1%. CPI is the Consumer Price Index as calculated by the government and often called the CPI-U. Now, a lot of us may have some qualms about how it's calculated, but like it or not, this is how our government measures inflation, the CPI-U. It came in soft today, minus 0.1 versus expectations of an increase, plus 0.1. So this is a swing of about minus 0.2%. It's the first time that we have had a decline in consumer prices since May of 2020. There was a lot of different things that happened immediately after the release this morning. Because CPI was down, we saw gold and silver take off all of a sudden. We also saw interest rates drop quite a bit, and bonds took off to the upside because bonds go up when interest rates go down. The market widely thought that this was going to be a piece of data that would allow the Fed to cut rates sooner. Why? Well, the Fed really has a dual mandate, as they've said all along for decades. It's really two things: stable inflation at around plus 2% per year and stable employment. Well, inflation has been persistently high since the COVID crisis. Therefore, there's been a game of chicken that's been played by the market and the Fed. The market wants the Fed to cut rates. The market thinks the Fed's going to cut rates. The Fed says we're not going to cut rates. We're persistently concerned about inflation. And then boom, today, the CPI number comes out, minus 0.1%. Well, we saw a great rotation, a lot of rotation in the market. Money came out of tech stocks. A lot of the tech flyers were down today. Microsoft, Apple, Tesla, the Fab 7, they were all down. And what was up? Different things: banks, energy, old school industrials. So we actually saw the Russell 2000 have a really big move today. It was up around 4%. The NASDAQ was down. The S&P was down. First time in a long time we've seen a difference in participation or a widening of breadth. For the first time, we can actually say that we might perhaps be seeing a move out of the tech darlings and the go-go stocks into the broader market. It's really too soon to tell, but we will see. I'm going to share a couple charts here. After the release, I took a look at the expectations of the market for rate decreases this year. Here's a chart for the Federal Reserve target rate probabilities for the next meeting, 18th of September, 2024. So this data here shows you that the probability is that there's an 85% chance that we're going to see a quarter point cut, because right now we're 5.25 to 5.5, and the market's saying there's almost a certainty that we're going to have a cut of 0.25% or 25 basis points. So that's pretty significant. It's almost completely guaranteed at this point. Let's jump forward to the December meeting and see what it tells us. This chart shows the probabilities for the 18th of December, 2024. Here, there's a roughly 44% chance of a 0.5% or 50 basis point cut. And this here is a 0.75% cut. So a 50-50 chance between a half point and 3/4 of a point between now and December. That's pretty significant. So the market sniffed this out pretty quickly, and gold and silver flew. Gold and silver took off. Gold and silver has been on a pullback the last month and been in a compression formation. And they broke out solidly to the upside, and the gold and silver miners have followed through as well. We believe in real assets. We believe in owning real assets, and we believe in the long-term merit of investing in gold and silver. While this is not to substitute for an individual conversation, and we would be happy to have one with anybody that would like to do so, we suggest in general, if appropriate for you, a 5 to 10% allocation of investable assets to gold and silver. Furthermore, our model has a 10% allocation to gold and silver miners, and we think that we're actually going to see or could see further upside in these stocks. And generally speaking, even though they have underperformed, gold and silver miners have a leveraged effect to the upside and downside. So if gold and silver go up 10%, you might see miners go up 20 or 30%. And the reverse, of course, is also true. So here's a daily chart of gold. This is an ETF GLD that tracks gold. You can see on a daily basis, it's been compressing here in my view, and has broken out a really solid move today, up almost 2%. On a weekly chart, it's a little bit clearer. We've had this triangle formation. We've had this big base back the last couple of years. We broke out to the upside, roughly in the 23 to 2400 range in gold. And the last week or so, we have broken out to the upside of this compression triangle. Hopefully, this leads to a new high in prices. Our short-term target would be around 2500. We think that's likely to happen. Of course, not guaranteed. We will see. Silver has been in a similar consolidation. It's got this down flag pattern here on the weekly chart. In the last couple of weeks, it too has broken out to the upside. So neither silver nor gold has made a new high recently. But if you take a look at some of the gold stocks, GDX just made a new high over the last couple of weeks after making a consolidation. The juniors, GDXJ, made a new high. Leaders like Eagle Mines made a new high, Pan American Silver made a new high, Wheaton Precious Metals made a new high. So the gold and silver miners are starting to run. This soft CPI print certainly helped them out quite a bit. Toward that end, we think that there's pretty good opportunity in these areas, and we'd suggest that you chat with us if you want to talk about it. So I'm really glad that you tuned in. Please remember to subscribe to our channel, like the video, share your comments down below. We do read them. We will do our best to respond. And in the bio, there's a link where you can reach out to us if you don't know how to. Until the next timely take, thank you very much for watching. This is Mike Preston at New Harbor Financial Group. See you soon.